Right, I think we are live, guys.
Amazing.
Let's just give it a few seconds for things to percolate through. Yeah, I think we're looking good. Welcome everyone to this very special webinar with a very special, actually two very special guests. One is hailing all the way from the island of Reunion. I got that one right. I always get that one wrong. Mufti Billal Umarji, and Aussie, who's a lot nearer from home, London, I believe, right, Aussie?
Recently to Essex.
I mean, yeah, that's brilliant, right? We're neighbours then. So we've got Aussie from Stepladder, and we've got Mufti Billal Umarji from IFG itself, who's who's going to be talking a little bit later on the Sharia compliance side of things. But we've got a lot in store for you. The first and key thing that we're going to talk about is we're going to talk a little bit about the Islamic mortgage market generally, and like if you're looking to buy a house, what are the things that you need to be thinking about right now, and what are the financing options that you have available. Then I'll talk a little bit about Stepladder and just give a bit of background on why we're interested, why we're so excited about what Stepladder are up to. Mufti Billal will then comment on the Sharia compliance side of things, and then we'll hand over to Aussie to give us a bit more of an insight into what exactly Stepladder is and how does it work and how people can get involved there. And then we'll open up for Q&A after that, inshallah. So let's dive in. Feel free, by the way, guys, to comment away in the comment section. We can actually see it, and so I can pick those up and respond as well, or as we go along. Let me just make this update so that you can see this. Hopefully this looks nice on the side. Islamic mortgage market, and now you should be able to see this. I do enjoy using this.
It's cool.
Yeah,
it's really cool.
Play around with it and do all sorts of things. So guys, I think in terms of like an overview of the Islamic mortgage market, there's a few key things, right? The first is that there's going to be a video dropping that's going to go into a lot more detail about this section in a very short period of time. So watch out for that. But in brief, today let's cover it. When it comes to Islamic options to buy a house, the first is you can buy in cash. This is obviously not ideal for most people for obvious reasons. The second is you can go for some kind of way of financing that large purchase that you're going to make. Either you can go for an Islamic mortgage, or you can go for some sort of shared ownership scheme type of product. Let's talk a little bit about Islamic mortgages first and the situation there, and then we'll talk a little bit about shared ownership schemes and the options there. So with Islamic mortgages, you have, obviously you've got our website to compare between the options. If you just go on islamicfinanceguru.com/Islamic mortgages, you'll find it. And there you've got a few key banks. You've got Gatehouse, you've got Al Rayyan, but then on the buy-to-let side of things, you actually have a few others in the market as well, like Al Ahli come in. Al Ahli actually, if you're buying a larger house within the London region, and you're getting financing that is a significant amount, then actually for residential property as well, Al Ahli could be relevant. But you have to fiddle around with the right numbers to actually even get Al Ahli to show up on the calculator. In terms of the prices, these guys, they do charge more than conventional mortgages. I mean, that comes as no surprise to long-term followers of IFG. And it is something that we would like to see Islamic mortgages reduce down over the next few years. But it is, in their kind of defense, it is tricky because the way that they get the money is different to the way that conventional mortgage lenders get their money. Conventional mortgage lenders get their money by borrowing off either the Bank of England or the interbank market. They borrow at 0.5%, they lend out at 1.5%, and they make a profit. Islamic banks can't do that because that's interest-based. So they have to get the money through savings accounts. But of course, that means that they have to pay out 2%. So if they then lend out at 2%, then that's not going to be profitable for them. So that's the reason why. But high level, the position in the market right now is that you can get rates somewhere around the 3.75, 3.85 mark if you have a decent deposit with you. In terms of the deposit sizes that we're talking about, the first thing to say here is that you want to get as big a deposit as you can when it comes to buying a house. And the reason for that is because the higher the deposit you get, the easier it is and more affordable it is for you to pay the mortgage amount. But also importantly, you get better rates, right? The smaller the deposit you have, the more risk the bank is taking, the more that they're going to charge you as well. So you want to try and get yourself a deposit. And actually, it's sometimes worth just spending a year or two waiting to go from 10 to 20 to 30%. To get yourself that better rate. And that's what I personally did, right? I actually had money to get like a 5 or 10% deposit, but I waited to get to the 20% mark. So, you should try and do that. In terms of the minimum deposits right now that are being offered, Gatehouse has now started. There was a lot of fluctuation in the market over the recent years. Recent months, because of the whole COVID situation and, lockdown and what have you. And Gatehouse, they'd upped their minimum deposit to something like 30%, 35%. That's come down to around 20% once again. Al Rayan Bank, on the other hand, their minimum deposit is around that 30, 35% mark. And the reason, I think that they're doing this, and this is obviously just my, my thoughts and the conversations I've had with people, is that Al Rayan are looking to slowly exit from the residential market, and they're not that focused on that. Which means that, Gatehouse is obviously, the big player right now. And actually, interestingly, again, my sources tell me that Gatehouse is going to be offering a lower deposit as well. So like a 5, 10% deposit could well be in the works in the next few months. So watch out for that. And then with Ahli, as I mentioned, it's only really relevant for people who are buying houses above 500,000 within the London region. And if you're that kind of person, you're going to get decent rates from Al-Ahli. But if you're not, then you're probably going to struggle to even get a mortgage out of them. So that's a really brief overview of Islamic mortgages. Now, when it comes to whether or not you should use a broker when it comes to Islamic mortgages, we typically find that it is better to go via a broker. I mean, I've done it myself as well, and it's quite a painful process. Islamic banks and most banks, frankly, are not that quick, and they're inundated with people, and they really want to take any option to say no, because the person at the end of the line is a human being, and they're just they want an option to try and get through these this like vast number of leads. And with brokers, we find that they typically will package up the product and your application in a way that makes it a lot easier for the person at the end of the line to look at this product. It's like fully done for them. It's ready. They can just stamp it and off you go. It makes the process a lot quicker, a lot more painless. And so we've actually started, when we fill in this Islamic mortgage comparison, that goes directly through to Precept Finance, which is an Islamic mortgage broker. And they're the guys that we use to get people sorted with the Islamic mortgage side of things. Now, if you look at the shared ownership side of the market, right, because Islamic mortgages, our obviously perspective is that they are permissible. They have some issues with them for sure, from an Islamic perspective and a commercial perspective because of the expense. But overall, we think that they are a legitimate thing that you can and should avail of if you need to. And I've personally used both Al Rayan and Gatehouse, so we have existing mortgages with both within the family. But there is a but, right? Because some people, they're just, from a personal perspective, they can't get comfortable with using an Islamic mortgage because of either the Sharia compliance issues or whatever the case might be. They may not necessarily have the full deposit. So for them, there are shared ownership schemes that you can look at. The way shared ownership schemes differ from Islamic mortgages. So Islamic mortgages, the real term that you should use, that is going on, is a home purchase plan, a HPP, and it's kind of like a mortgage product. It's a regulated mortgage product, whereas with shared ownership schemes, you have people who are going into a genuine partnership with you, where they are buying a percentage of the house, you are buying a percentage of the house, and then you are paying the market rate rent on the percentage of the house that they own. So let's say you owned, let's say the rent was £2,000 and you own 50% of that house. You would be paying £1,000 on a rent for that property. And typically you would find that this is more expensive than going for an Islamic mortgage, right? The number to look at is how much is the rent per annum. And the rent per annum you will typically find with the shared ownership scheme is around the 5 to 6% mark. Whereas the number to look at, the equivalent number to look at with an Islamic mortgage is what's the annual rental payment that you're making, or with a conventional mortgage, what's the annual interest that you're paying. And those numbers, you want to try and compare those up from an affordability perspective. You'll typically find shared ownership schemes of around 5-6%. Islamic mortgages have around the 3.75%. And then conventional mortgages, which of course are impermissible, will have roughly around the 1 to 2%. So they're obviously the cheapest in the market. The way shared ownership schemes work and the options that you have available right now, the first one is Halo Housing, which has been around for a while. They very much work like this. A few things to kind of flag here. The first is that they don't, these guys, they get a bunch of money from a pension fund, like 100 million, and then they deploy it within like a month, right? Because 100 million is actually not that much money if you're lending out 200,000 pounds at a pop, and it goes very quickly. You've got those guys, and then you've got StrideUp, which is a HPP/shared ownership product, which is coming into the market very soon. So that's going to be really promising. That it looks like they're going to come in with a low minimum deposit as well. So that's going to be helpful for people. And then you have Way Home, which is the other big one that is coming into the market as well, and they've got a decent amount of money behind them as well. So all of these guys are going to be people that you can look at. And then a bit of a smaller player is Primary Finance. They've done a few about I think a dozen or so properties so far. But again, with all of these players, the key challenges are getting onto the list, because they don't necessarily have the billions that a bank will. The second is the price differentials to look at. The third is that there are sometimes restrictions in terms of the properties that you can go for. Some only allow you to go for new builds. Some say that you're not allowed to go for any new builds. Some say that you are only allowed to go for properties on their platform, on their website. Others say that you can go for anything, but we need to approve it. So there's lots of different terms and conditions that you have to think about when it comes to shared ownership schemes. And then I guess I'm just thinking if there's any other routes that you could go to buy a house. Any other routes? Have I missed Aussie? The person who's you're deep in the property market these days.
No, you covered most of it. Straight cash for those lucky enough to have the funds available. Mortgage or shared ownership is pretty much the way at the moment.
Fantastic. Okay, great. So that's an overview of the Islamic mortgage market. What I'll now do, once I've done some fancy work with this update, is a Stepladder overview. I do enjoy this. Stepladder overview. Okay, so you've got the fine gentleman in the picture, Aussie from Stepladder, who will be in a very short period of time talking us through the whole Stepladder proposition. So Aussie, you'll be pleased to know that I won't steal your thunder, but what I will do is I'll kind of talk about how we came across Stepladder and why we were so excited about it. The way we came across Stepladder was I think some mutual contacts introduced us, and they were very reputable contacts that we've either worked with in the past, or we've worked with them from an investment perspective. And Stepladder, in a nutshell, for those of you who've grown up with parents from the subcontinent or the Middle East or Africa, you'll have come across various different names for this concept. In our language, it's called the committee. Other places call it the Jam'iyya. I'm sure, Aussie, you probably know like a bunch of the names.
Hundreds.
And the concept is very, very, very similar, right? The concept is that you just get together 5, 10, 15, 20 people, and each month you pay in a set amount of money into this pot. And that money becomes, let's say, £10,000 contributed in by 10 people, £1,000 each. And then every month, randomly, that £10,000 is allocated to one person. And so over the course of 10 months, let's say, everyone would have ended up with £10,000, which is, essentially them saving up. But crucially, and this is why I got quite excited by this, crucially, most of the people, in fact, 9 out of 10 of the people on that list will actually end up with £10,000 quicker than if they were to do this themselves, which is a game changer, right? If you think about, maybe going for a longer period, maybe 12, maybe 24 months over different structures. And that allows you, and I know Stepladder don't necessarily offer this like right now, but let's say you have a longer timeline, you can actually end up with a significant amount of money much quicker, which makes it a lot easier for you to get onto that property ladder and get cracking much quicker than if you were to do it on your own. So that's why, fundamentally I got really interested in Stepladder. And then I was like trying to work out, quite frankly, okay, where's the catch? And of course, like Stepladder, they do charge admin fees, and I quickly found the admin fee page, so it wasn't hidden away. And I kind of started thinking, like, is it worth it for me to pay an admin fee to just save up money? But it was reflecting back on the point about, get the chance, the 9 out of 10 chance of getting that money quicker. And, would I like to get onto a property ladder and get that deposit, a month, a year or 2 years earlier? I think so. And I think I'd pay for that. And obviously, alhamdulillah, I'm in a lucky position where I've already got myself onto the property ladder. But I think if I was thinking back and when I was saving, I think I'd definitely take up something like this. So that was kind of my thinking when we decided let's try and bring this opportunity and bring this product and awareness of this product to the rest of the Muslim community. We don't we get approached with hundreds of products every month. We don't bring most of them to the Muslim community because it doesn't seem right or something's wrong with it. But this one, I genuinely think is really cool. And of course, you guys are regulated as well, so that gives a lot of peace of mind as well. But enough of me and speaking from my side. Mufti Billal, you've been silently sitting there, ruminating away about the life and the universe. I'd love to hear your thoughts on Stepladder from a Sharia compliance perspective, and over to you.
Yes, thank you, Ibrahim. Assalamu alaikum and hello everyone. I think first of all I'd like to say that what Stepladder is bringing to the Muslim community is really a fantastic opportunity for them to get onto the property ladder, and I hope that inshallah it will go well for yourself, OC, and for everyone. Now, when it comes to lending in general, anything that's got to do with loans, the first thing that a Muslim tend to ask themselves, or at least they should be asking themselves, is that will there be any sort of interest payment involved in that repayment of the loan? Now, how do we actually define interest from an Islamic perspective? Interest from an Islamic perspective can come in many, many forms. But when it comes to lending, the scholars of Islam have defined interest as any sort of benefit that is going to be given to the lender as a condition for the loan to happen. So for example, if I'm going to lend somebody £1,000 and I'm going to say to that person, please repay me back my £1,000 after a year, with the condition that you're going to be giving me a lift every day to work. Although there is no financial compensation involved, but that because of the benefit that I'm deriving from lending to that person, that in itself is an interest, and that is impermissible from an Islamic perspective. Now, when we look at the structure of loans involved in Stepladder, we can say, or I can say, that there is no interest, there's any sort of interest are not involved in the repayment of the loans. So this is out of the way. All Muslims should be confident with that there is no interest involved, there's no hidden interest payment involved in the loans provided through Stepladder. That's one thing. Although, as I mentioned earlier, interest can also come in many forms, and sometimes it does come in the form of admin fees. Now, these admin fees can be related to arranging the loan itself, or they can come in the form of admin fees to manage the late payments from the borrowing side. Now, when it comes to admin fees related to arranging the loans or admin fees related to late payments, the scholars, they have differed regarding this matter. In general, they considered late payment fees or admins related to arranging the loan as same as interest. So for example, an Islamic bank that claims to be providing interest-free loan cannot charge an admin fees for arranging the loan to its customer. Now, Stepladder do have some form of admin fees, but these admin fees, again, are not interest. Why? Because Stepladder is a third party. Stepladder is not the actual lender. The lender will never derive any form of compensation from lending to somebody. And the admin fees that Stepladder is collecting does not go to the lender itself. Stepladder, as a third party, has got every right from an Islamic perspective to charge an admin fee for the work that he's doing, right? There is a real cost that is associated with arranging the loan. That is one thing. And in the case of a late payment of a default, there is also a real cost in terms of admin fees for, for all the paperwork and for chasing, the person that is late in the payment, etc. That is real work. And these works are involving real costs. And for that reason, these admin fees are not considered to be haram. They are not considered to be Sharia impermissible in my eyes. So they are absolutely fine. So future Muslims, customers who will be going through the terms and conditions of a Stepladder, they should feel reassured that there is nothing wrong with these fees, and they can sleep peacefully, inshallah. So this is one thing. The second thing that they also need to consider is the zakat treatment of the loans. So obviously, it is too long for me to explain it into details. But one thing I would like to say is that when it comes to the committee structure, sometimes the person who is the lender can be in the position where he has to pay zakat on the money that he's lending. But at the same time, there will be a time where he is not the lender anymore, but he's the borrower, meaning he's already taken the money out. And because of that, he might be in a position where he does not have to pay zakat on the money that he's lent, but in fact, he can actually deduct the amount that he has borrowed from his zakat calculation. So this is something that we must consider when the time of your zakat comes. You need to consider it, and you need to seek advice from a scholar to see whether you actually need to pay zakat or not. And alhamdulillah, there is National Zakat Foundation, and even ourselves, our Islamic finance guru, we're here to provide you with this sort of advice. And other than that, there's not much for me to add onto the Sharia compliance of Stepladder structure.
Fantastic. Thanks for that, Mufti Billal. And I think, your French accent is always pleasing to the ear of many people. I highly welcome that. Ossie, without any further ado, do you want to talk us through, what's all the fuss about? What's this Stepladder business going on about?
Definitely. Well, thank you, Ibrahim, and thank you, Mufti Billal. That was a great summary. And thank you everyone for joining us, especially giving up your time. We really appreciate it. So Ibrahim gave a great summary of how Stepladder works. Many of you might be familiar with the method of committee, or you might have heard it as an Agile or Gamaya or Susu. There's hundreds of names, depending on which country you're from. Each country has about 5 or 6 that they use. So it's something that many of us might be familiar with. You might have heard an auntie, or maybe your parents, your cousin. We've all heard someone doing it before. And I'll start off once again, just to summarize. The model is when you have a group of people, let's say you have 5, and they all contribute into one shared pot. They all put money in. Let's say they all put in £100, meaning there's £500. That means every month there's £500, and that goes to one person. Next month, it goes to the second person. Third month to third, fourth month to fourth, fifth month to fifth. So by the end of it, everyone has received their 500. Everyone's paid it in, but we all just get it at different times. So that's the summary of how it works. And the reason why it's different from just doing it traditionally, there's many reasons, but I'll just focus on a few. Number one is digital, so no cash in hand. We're a platform that has authorization to trade from the FCA. So we're not an unregulated business, meaning we are accountable. We are doing things responsibly as well. So it's a trusted platform you could use that's digital, and it's purpose built for this. When I say purpose built, I mean that I spoke to someone just about a month ago. A lady, her and her friends do it, and they use Monzo to send, their round each month, a few £100s. And Monzo has blocked some of their bank accounts because they're thinking it looks dodgy because you're sending money every month to one person, and then a big balance has just landed in your account. So you could do it traditionally. There's nothing stopping you, but it comes with a lot of hassle. When somebody doesn't pay, now you and your friends have to come together, and money can be awkward to talk about sometimes. We take that all off your hands. So it's digital, it's on a regulated platform, and we put a lot of we take a lot of the burden off your hands. So I've seen some people ask in the comments, what happens if somebody doesn't pay? What happens if this happens? The good thing about us as the platform is that we take care of all of those burdens. So with all of the questions, we're going to get to questions at the end, because there've been some good questions, but the summary is that it's always our problem and not you as the individual. So if anybody decides to, be a bit bad or doesn't want to pay into their group, it's us who takes the hit and not you as the person using it. So that's one of the main benefits and why it's different. And a few other things, as Ibrahim mentioned, that the speed helps people get their money faster than if they had saved a loan. But that's not even the main benefit that we hear from people. A lot of people say that actually the fact that I was not disciplined to save any money at all, but now joining Stepladder, it's like it's forced me to put money away. And that's one of the main things we hear from people, is that it's actually made me commit. Because before I wasn't serious, but now I've actually stuck to it and it's worked. We hear that all the time. And another one that's really interesting is credit. So we report to Equifax, who are a credit bureau. So by joining Stepladder and paying into your circle, you have the potential to actually build your UK credit rating also, without having to maybe take out a credit card or take out an extra loan, or there's different ways we can build our credit, but this is a way you can do it whilst you're meeting your savings goal, which I think is a great benefit. And the final one I'll just mention is that we offer a lot of support and advice. So as you're buying your first house, we are there to hold your hand throughout that journey. So many of you might know that when you buy a house, the estate agent is there and they represent the seller. So their job is to sell the house for as much as possible, to help the seller make as much as possible, and they also get a commission. Whereas us, we're on our own. So having Stepladder on your side can make a big difference. And I refer to my favorite story, which is of a lady called Irene who was buying a house. She found a house that she fell in love with. She put her offer in, and then the estate agent came back and said the seller has asked for 20 grand more, and she was about to do it because 20 grand more sounds like a lot of money, but realistically it means that her mortgage would be more. So it's less money that she has to put up front. It just means her mortgage payments would be slightly higher each month. Because of the house she loves, she was happy to do it. But she came to the team, we gave her some advice, we showed her what to do. So we said, call the estate agent, tell them you want to see some other houses so they know you're not falling for their tricks. And then 2 weeks later, they called back and said, all right, we'll give it to you at the original price. So we helped her save 20 grand on her house just through giving her a bit of mentorship, which is personally, I think, is another great benefit. So those of you that might be questionable about the fees, like Ibrahim mentioned, I'm sure a few £100 is better than 20 grand. So those are just a few benefits of Stepladder. And just to add to what Ibrahim has said so far is that we are doing a dedicated group just for IFG. So we have opened up a section where you can join with the Muslim community. You won't be with any of our normal circles. You could just be specifically with the IFG group so we can work together. So we've made an exclusive one just for IFG and for their community to join. And we're here today to take any questions. We've seen some amazing questions in the comments that I would love to get started on if you're ready, Ibrahim.
Yeah, let's do it. No, many thanks for that, Ossie. That's a really helpful overview. Let's dive in, I guess. And I think, you guys are asking some great questions. You're asking the right questions. And let's do this. What is a broker? Broker is a middleman. Someone has answered, which is basically right. And this is relevant to the Islamic mortgage section.
I did actually see one early on, which was about, are there schemes to help someone buy a council flat? And I forgot to mention that earlier. So there is a government scheme called the Right to Buy. So if you are a council tenant and you've lived in that property, I think you need to live there for about just 2 to 3 years, you qualify for a discount on the property. So you could actually get a mortgage on that council flat. And the discount varies depending on whether you're inside or outside of London. And if you're inside London, I think the maximum you get a discount of about 100 grand of the property. So that's a scheme you could look into. Yeah,
for sure. The slight downside for that one is that Islamic mortgage providers typically don't provide mortgages for help to buy. But if you can buy in cash, it's definitely there. Let's move on to, how about this one? Will Islamic banks accept deposits saved, borrowed through Stepladder? Yeah, sure. Like this is just a way of saving up a lump sum. And correct me if I'm wrong, Ossie, but you don't even need to use it for your house, right? You can just use it for any purposes.
Yes. So there's different products. One is called First Steps, which is for people who are just starting out, if they want to maybe try and build their credit, or if they just want to get started, or maybe if you think, I'm not sure about this yet, let me just try with a small amount. That you could use to raise £500, £1,000, and that will just go straight into your account, and you can use it for whatever. The other one is Home Circles, specifically towards your property. That's what we've been speaking about today. And yes, once you have it, it's there in your name. We could send it. What will happen is that, we'll send it to your solicitor once you've made that progress on your home buying journey, and we will give you a statement to show proof of funds.
And is it possible to get that one to you as like a lump sum? Let's say you decide not to buy a house.
Yes, so you will get that at the end of the circle if you don't decide to buy a house. So let's say you've got £10,000, you've been drawn in the second month. What we'll do is we keep that money in a separate account that's in your name. So it's separate from us and it's separate from you. So you can't go and, some people might go and be tempted to splash it on a flashy holiday or a sports car. But we'll keep it there. So what that means is it's protected if we ever go bust as a business, which, shouldn't happen, but it means we're not going to be relying on our users' money to keep us going. And also, once it's separate there, we can send you a statement to say these are the proof of your funds. You can start your application, you can start your journey. It just helps us as an extra security measure for people who might say, okay, I don't want to pay anymore. So if you don't pay anymore, we can also access that monthly payment from it. If you decide not to buy, the circle has finished, you can have it straight back into your account.
Understood. How do you sign up? What happens if someone fails to pay their part?
So to sign up, I believe you sent the link already, but we can send it again, and maybe put it in the description. So there will be a link there, which is join Stepladder /IFG. But the link is also in the chat. So that's how you sign up to make sure you're part of the IFG circle. So make sure you click the IFG link to not miss out on their exclusive group. What happens if someone fails to pay their part? So as I mentioned earlier, the short answer is that it's our problem and not yours. So we have many different things in place to make sure that the group is unaffected. So if I give you an example, if there's a group of 10 and one person throughout the whole duration didn't pay a single part, what that would mean is that person won't qualify, so they will never get the money themselves. And to make sure that the rest of the group still get their full pot, because they would be expecting, let's say they'd be expecting £1,000, not £900. What would happen is that we would actually take that last spot that's missing, so that we would put it in to make sure the group is full, and then we get it back at the end. That is if someone decides not to pay. So far, we've awarded over £1 million across all of our circles, and the amount of people who have defaulted, so these are people who eventually decided I don't want to pay, is below 0.2%. So it's something that has not been a common issue at all. It's been working really well.
That's brilliant. And you've not even had to send around the heavies or anything like that.
The boys in blue.
Yeah, exactly. Okay. So Anjum says the money loses value over the long time due to inflation. So in real terms, you get back less than what you paid in originally. Maybe if I maybe give some brief comments on that, and then Ossie, maybe feel free to add on stuff.
Yes.
So my thoughts on this are that let's say you're saving for a deposit. I was saving for a deposit a few years ago. You don't want to be putting that into anything particularly adventurous. You might want to put it in a savings account. You might want to put it just in cash. In my case, I actually just put it mainly in cash, particularly for the last year, and that is actually the prudent thing to do if you're saving for a deposit. And the reason is because this is money that you can't afford to lose, and it's time sensitive. And you can't afford to put it in equities and that goes up 5% or it goes down 5-10%, and yet you're actually now not able to buy a house. So the actual prudent advice that you would typically see from people in personal finance is that you should look to hold your deposit money as you get closer to actually buying a house in as safe and liquid a place as possible, and that often means just cash. Now, if you're holding money just in cash, then of course you compare that with putting it into Stepladder. It's actually the same thing. Like you're going to be losing. Sure, you're going to be losing a little bit over inflation. You're going to be losing 1 to 2% per year on inflation, but that's the same that you would be doing if you were doing it outside of Stepladder as well, if you were being sensible. So that's kind of how I would think about it. Anything to add, Ossie?
Yes, definitely. What you said is very true. You want to have the money available closer to the time. I think for my own example, I left some in the stocks and shares. It wasn't a big amount as I was close to buying, and stocks had plummeted, so it was affecting my deposit because it is quite volatile. So you want to have stable cash. I 100% agree with that. Naturally, yes, if you just save cash in hand for like 2 years, over time it will go down in value because of inflation, because things get more expensive. But what you want to remember is that the whole purpose of this, there's two aspects I would use to address this question. Is one, there are people who struggle to save anything at all. So this actually helps them be better off. And also rising house prices, if you can get in earlier, to beat a house that might be worth an extra 10% next year, you're better off, versus if you put that money in, you got 5% or whatever from investing it. So that's how I would counter that. It's a very good question, but that's how I would address that question.
Yeah, it's a great point. If you miss a payment, will this reflect negatively on your credit score?
So we, as I mentioned earlier, we report to Equifax, who are a credit bureau. If you miss a payment, and let's say you intend to say, so there's two types of people. There's people who miss intentionally, and there's people who there might be like a unfortunate circumstance or the timing is not right. We're not like that strict that if you miss it by a day, we're coming for you. Because of the provisions we have in place, we can allow groups to be uninterrupted, and we allow people to make catch-up payments. It's people who, what we define as default, that's what would reflect badly on your credit history. So if you don't pay consistently and you've been drawn, then that would affect your credit. If you haven't been drawn and you're paying in, and there's 1 month you say, hey, things are a bit hard this month, I don't think I'll be able to contribute, there's no problem at all. That's fine. Also, if you've been drawn and you tell us, you know, the next month or two might be tricky, but I can catch up, also very fine. It's for people who deliberately are trying to cheat the system, who it can hurt them.
And rightly so, right? I mean, what you don't want to be in a committee with 10, 20 other people where someone's not pulling their weight. And
Exactly.
you know, the least you'd want is that their credit score reflects that, because you don't want other committees or organizations to be hurt by that. Here's a good question by Shabazz, which is, why is Stepladder more advantageous than traditional methods like the committee?
Great question. As I mentioned earlier, that we take all the admin off your hands. So I don't know if you've ever met someone, or maybe you have yourself have tried running one with a group of friends. Sometimes it can be a bit of hassle. You have to chase everyone. If someone can't contribute that month and then they're in a bit of a difficulty, it can be a bit annoying for the rest of the group. We take all of that off your hands. That's just the first part. So we make it digital. I mentioned earlier about someone whose account had been blocked, their Monzo account, and it's a story that I've heard from a few individuals who do this regularly. And finally, there's that extra level of protection to know that if you're doing it cash in hand, if someone runs away with the cash, there's nothing you can do about it, unless you go to their house and you each have to take things into your own hands. But that's also not the best. So is this a bit more assurance that it's with someone else? If something goes wrong, then it's our problem, it's not yours. I think that's the best answer I usually have to give, is that you have that peace of mind that it's the problem, the pressure's not going to be on your head to make sure everything is working. Alongside the other benefits I mentioned when talking about Stepladder, just from joining the platform.
Yeah, no, it makes a lot of sense. I think this is a fair question. It's like one question I reflected on as well when you guys first reached out. And I was thinking back to my mum when she was part of a committee with a friend who was like someone active in the community who knew a bunch of people. And I was thinking about, and I went through the Stepladder sign-up process where you give your ID documents and you get a lot of information about the person and affordability and all of that stuff, suitability. And I was thinking, that auntie, very lovely lady, she definitely wasn't doing any of this stuff, and understandably so, right? It's like all kind of informal. So and as someone who runs with IFG.BC, a regulated product where we have to do this as well, where we have to onboard people and we do all of the background checks on people, and you get a lot of information about people, including if that person is a scammer, or if that person is a money launderer, or if that person is wanted by some government or something or the other. There's a whole range of different things that you find out, and companies like Stepladder and any other regulated entity has to do that for a reason. And sure, all of this admin takes time and cost, but at the same time it just reduces, like that 0.2 figure in terms of default rate is pretty impressive. And I think in part that is because you can filter out a lot of the people who would potentially be problematic as well, right? So I think there's that to be said about this as well.
Definitely.
Is it likely that the fees will reduce as Stepladder scales up?
It's a very good question. I would say yes. As we grow, we could definitely look at reducing it. I think at the moment it's just important for us to make sure that we are a sustainable business. As we scale up and our revenue increases, we could get revenue in other areas. It's something we'll look into. So definitely, it's a good question.
Makes sense. But presumably members have paid their zakat prior to investing. Not sure what that means with Stepladder. I guess they couldn't pay their zakat prior to investing with Stepladder, but I think Mufti Billal was talking about a situation where you have to pay zakat and you are currently part of the circle.
Yeah, that's right.
Are you FSCS protected?
No, Stepladder is not FSCS protected. And the reason for that is, well, we're not eligible for it. So FSCS protection works for your bank account. So your bank account is where your money is just sitting there on a deposit. And if the bank goes bust, then you get your money back, essentially up to a certain amount. Because Stepladder, the money is always on the move. It's always with a different individual. There is no money to go, if that makes sense. So and as I mentioned, the money is separate from us. So if we go bust, your money is not affected. FSCS protection is for if the company goes bust, then how do I get my money back? So if we go bust, your money is still separate from us, and it will never be in our own accounts mixed up. It's always kept separate. So the nature of our product it just doesn't fit. So FSCS protection is for a typical bank or savings account. But as you might imagine, the money's always with one individual. Every month the money comes in and it goes to one person of the group. Next month comes in, goes to another member.
Makes a lot of sense. Someone's asking about admin fees. What are the admin fees?
So with the IFG circle, we've got two groups, £100 a month, where the admin fee is £5 on top a month, and £500 a month where the admin fee, if I'm correct, is £17 a month. And that will be on top. So you will pay 517 as an example. The admin fee won't be reduced, like minus out of your total lump sum that you're supposed to get.
Makes sense. So if you're paying £500 a month, you pay 17 quid as admin fee for that. And how long is the circle?
The IFG circles, I believe, are both 10 months long. So 10 people for 10 months. And if we have a lot of interest, from what I've seen, there's been some good interest already. We will open up more. Yeah,
makes sense. So if someone's saving £500, it'd end up saving £5,000 at the end of that 10 months. But what if they want to save £1,000 a month? What happens then?
Oh, that's a great question. So if you want to be in the IFG circle and you want to do £1,000, one of the easy solutions is that you could take 2 spots. So every group, let's say there's 10 people, you could represent 2. So you would take 2 of those spots, meaning you would pay 500 twice, and you would get your 5,000 twice. So you will pay in £1,000 a month for 10 months, and you get 10,000 back.
And what's the highest and lowest amount that you can pay in?
The lowest is £25 a month. The admin fee on that is £1. The highest that we've done as an individual spot at the moment is £500 a month. But as I mentioned, you could take multiple spaces as much as you're able to afford.
Makes sense. Are you FCA regulated? The answer to that is yes.
We are regulated as a peer-to-peer lender, as an appointed representative.
Many thanks. This one isn't a question, but I'll just massage our ego for that. With that one.
It's necessary.
Alhamdulillah. It's nothing to do with us. I think we all we try and do is serve the community. Thanks for the answer. However, none of the Islamic banks help. Does Stepladder help? Stepladder helps you save, but it doesn't help you with the actual mortgage, itself. They don't offer mortgages themselves. Maybe I don't know. 5 years time, 10 years time,
Yeah,
you might
one day.
Islamic mortgage provider. So how can we use this for student tuition fees? Mr. asks Ossie.
That's a very good question. Anything outside of buying a property, we would say use the first step circle, which is to raise £1,000. You could take more spots. So if you wanted to do a few £100 a month in that 10-month circle, let's say you do £300 a month, you'll pay £300 and then you'll get £3,000. £1,000 at 3 different instances, which you could use for whatever purpose. So anything outside of the property ones you could use for any purpose, but you would have to join the first step circle, which is £100 for each spot.
Ido is asking, do you have to go through a solicitor?
When buying a property, yes, you would need to. I'm assuming that question is when buying a property, yes, you need a solicitor to do all the legal checks. Well, you're probably more qualified to speak on that than I am. For Stepladder, only when you're buying your house during the circle, we send it through the solicitor. Once the circle has finished, we can send it straight to your account.
Understood. Okay, so let's say you're buying a house and you're on the house circle, and let's say you're called in the first month and you end up with £5,000. At that point, it would just come to your bank account, right? You don't have a house yet. You don't have a house that you want to buy yet. What happens?
Say that again, sorry. So if you have a house,
you want to buy a house.
Yeah.
Let's say you get called the first month and you end up with, I don't know, £5,000.
Yeah.
Where would that money come? Because you don't have a solicitor yet, do you?
Yeah, so we would have it in that separate account that I mentioned. So it's called a client money account, where it's in your name, but it's not in it won't be in your Barclays or whichever account you use. It will just sit separate. And then once you're ready for it, we'll push it to your solicitor or we'll send it into your current account if the circle has finished.
Understood. Makes sense. How else, Ido's asking, how else do you generate income apart from admin fees?
Good question. So we offer referrals to services that could be useful. You don't have to use them, but they're just trusted partners that we've used and we know that they do a good job. So that might be a mortgage broker, a solicitor, a surveyor, anything along the lines to help you on your home journey. They will pay us a small referral fee, and that just helps us improve our income. And as we grow, if we can make enough from that, then we could look at reducing admin fees and stuff like that.
Can we use it to buy a property abroad?
Oh, very good question. At the moment, we just do UK properties just because we can send it to the solicitor. Once the circle has finished and the money's in your account, you're free to do whatever you want with it. So if you just want to join this and benefit from being able to commit and hit a savings goal, once it's finished and you've got your 5,000, your 10,000, however much you've decided, you can use that for whatever you want. Whilst it's running, whilst it's ongoing, it would need to be for a UK property if it's for that 5,000 or 10,000 one.
How can you get corporate investors, Ossie? Can you get in companies or limited companies investing, or is it just individuals?
Oh, that's a very good question. I would have to double check with our membership team, just because when we pay money out, I'm just not sure on the small intricacies if we can pay back to a company or pay it to an individual. I would have to double check, but definitely contact us and we could discuss that question further about corporate investors.
Yeah, makes sense. Is this a Rosca? Yes. How can you run an efficient business if you allow members to pay late? How do you fill up the deficit given that you depend on admin fees to remain afloat?
So as I mentioned earlier, we have a small provision that can fill in if there's a gap, and then we would get that back from somebody after. So we've built the business with that small provision in mind that we've been able to get back if someone pays in late. But just remember, like, there's not an advantage to paying in late, because if you pay in late, you won't qualify to get your money. So there's no advantage to someone paying in late.
Makes sense. I think we've already answered that one. Are there a few apps in this space? There are a few apps in this space. What makes Stepladder different?
There's a few things. I wouldn't say there are many that are doing the roster. There have been some before who haven't done it successfully, and a lot of it is because of they see very high default rates. A lot of it is just with the small intricacies to make sure that other people are not affected. The money doesn't go missing. As I mentioned, the default rate for us has been working really well, and that's a lot to do with how we've built it in the back end to make sure that people pay and they don't run away with the cash. So that's one of the main ways that we're different, because a lot of them have started and are no longer around.
Madagascar, yes, we'll save this live video. You can just see it on our YouTube channel. It automatically is available afterwards as well. I'll skip this question because it seems to be about crypto. But Peter, I think that's just a comment. Khadija's asking, how do you triple the money you're placing in Stepladder? Where's the money coming from? I think the answer is, the circles that we're discussing, it's not really about tripling the money. It's about saving up the money. So you'd save in £500, let's say a month, over 10 months, you'd end up with £5,000 at the end of it. And the money is coming from you, basically. You're going to be paying in the £500, but because other people are participating, it gives you the chance to get that lump sum early on. We have actually covered this earlier in the webinar, so maybe once this goes off live, you can always go back and review Ossie's description, so you fully kind of understand what's going on. And then Ahmed is asking, so the funds are only released after the circle is finished. That is right, is my understanding for the home circle, unless you have a property that you actually buy during the circle, in which case it can actually be released direct to the solicitor as well.
Yes. And if it's not a property one, if it's the smaller one, for £1,000, that will go straight into your account. It's only that property circle, which is for 5,000, that will go to your solicitor whilst it's running. Once it's stopped, you can have it.
Understood. And the £1,000 one, is it also 10 people per circle?
Yes.
Yeah, because I was thinking, well, what if I just take out 4 spots on that circle?
You can do that. Yeah, you'll pay in £400 a month. What will happen is you won't get $4,000 immediately. You'll get 4 draws. So you'll get £1,000, £1,000, £1,000, £1,000.
Yeah, or 10,000, right?
Yeah.
Whatever it is, it would work out. Okay, cool. I think we're out of the questions, and it's beautiful timing because we are also out of time. I hope that this has been helpful to everyone.
Yeah.
I've certainly enjoyed this, and enjoyed thinking about how one should go about saving for their deposit. I think that there's genuinely a bunch of opportunities out there now. If you're thinking about getting yourself an Islamic home financing, either via mortgages, Islamic mortgages, or shared ownership schemes. And I think now from a deposit saving perspective, I think people like Stepladder, both from a getting you to save perspective, but also healing your credit score and also giving you a chance to get onto the property ladder earlier, make this a really interesting proposition. If there's one thing, Ossie, I would like to see from you guys, it's longer circles.
Longer.
Yeah, because longer and bigger circles, because I think obviously maybe you need to do more credit checks, but if you can access a 24-month savings, obviously that makes it, I know it's probably harder for you guys from a credit perspective and all sorts of perspectives, but that makes it really interesting like me, right? Because then you can get a 25k chunk instead of a 10k chunk.
Definitely. It's something we can explore. If there's a demand for it, we can make it work.
Brilliant. Guys, it's been a pleasure speaking to you. Please do, if you do join Stepladder, please do check out the IFG circle, so that we can kind of be part of that same community. And I want to see how this goes. Inshallah, if this goes well, then we can do other things and try and really deepen this whole committee kind of program and make it happen for a lot more people as well. Many thanks to you, Ossi, for making the time, and many thanks to Mufti Billal as well for making the time. Until next time, everyone. Assalamu alaikum.
Alaikum salam. Bye bye.